What's going on, ladies and gentlemen? AcesBlackStar in the building. Welcome to another YouTube video. In this video, I'm going to show you exactly what my process is because it's Sunday right now. I'm going to show you what my process is at the beginning of the week before the market opens and just kind of show you a little bit about what I do and how I do it. And hopefully you can grab some value from this video. Maybe you can integrate it into your trading skill or setup, or weekly analyst, or whatever the case may be. But let's go ahead and jump on a computer. All right, so I know I said we got to jump onto the computer so we can go through basically every Sunday routine. But before I even do that, I have to do one more thing, which is look at the news for the week. All right, so if you don't have these websites as of yet, I'll go ahead and put you on to them. But the first one is Forex Factory, and this is a website that I like to use. I'm already signed in. Once you actually sign up, it's absolutely free to sign up, but you get all the news, events, and stuff like that you actually going to follow based on the pairs that you trade. So this week, we've been going really heavy on EU, and I do have a couple AU trades in as well. So for now, what I'm going to do is I'm only going to track the EU trades just to show you guys what it's all about. And this is basically what I do. So because I'm on my phone, I actually go here and I have the Galaxy Z Fold. So I can look at two things on one screen. You probably can do this on your iPad, or maybe look at it on the computer and then type it into your calendar, whatever the case may be. When you are really serious about your finances, your business, your trading, whatever it is, then you start to really manage your time effectively, which means that you utilize your calendar to the max. Okay. So with that being said, if we come here to the 15th, and I look over here on the left side, we have the USA Empire State Manufacturing Index. So what I would do is I would just come in here, and because I've already been doing this for the last 2.5 going on 3 years, some of these things actually automatically populate into my calendar because I've already typed it in before. As you can see, Empire State Index. And what I usually do too is I will document what it has done last time. So last time it had a spike up and down, but no real movement, which means that there was just a spread increase, but the price didn't really move. So it didn't really jump up 10 pips, 20 pips, 50 pips, or anything like that. It kind of just spiked because of spread, and then it went back to normal. So I am taking this information into consideration, not taking it as permanently that is exactly what's going to happen tomorrow, December 15th, but I am taking it into consideration to know that, hey, this is what happened last time. So let me look out for what's going to happen this time, and maybe something similar will happen. That's all I'm doing, ladies and gentlemen. I am not taking for granted that this news event is not going to push the market up or down. I'm just taking into consideration what it did last time, and I am moving cautiously. So that one is in the books. Now I go over here to Tuesday, and as you can see, we have all of this news on Tuesday, and I'm not going to bore you with typing all of this stuff in and watching or having you watch it, but I will type a couple of them in just so you can kind of see what I have last time. So you are French Flash Manufacturing PMI, and then the French Flash Service PMI. Those are both 3:15 a.m. So if I click on that, because I've already typed it in before, this had a 5 pip gap down. So it just gapped down 5 pips. Like I said before, I am not taking this as confirmation that this is exactly what's going to happen on Tuesday, December 16th, but I am taking into consideration that this is what happened last time this news event happened at 3:15 a.m. It gapped 5 pips. So I'm going to be looking for a gap and just a spread increase and then decrease. But I'm not looking for anything serious because nothing serious happened last time. Does that mean that I'm going to be trading at 3 just because there's only a 5 pip gap? No, I'm probably still going to wait till after the event. But I do want to take into consideration what happened last time because I could be in trades right now. And if I have a stop loss that's really close, maybe that 5 pip gap, it will hit my stop loss and then go into the direction that I'm wanting to go into, or that I am anticipating it going into. So what I would do is I would either move my stop loss or remove my stop loss at 3:15 and then put it back, just because last time I know that it gapped 5 pips. It could gap 5 pips and hit my stop loss and then continue in the direction that I expect it to. And that would just be a stupid trade to lose just because of that news event. So I would rather just move my stop loss or remove my stop loss, because I know that this happened last time if my trade is already close to my stop loss. Or maybe I just set my stop loss on Friday or Monday and now it's Tuesday and it's close by. So that's kind of how you use this data, how you use this information. Don't take it for face value that it's going to have the exact same movement as last time. All right. So we got that at 3:15. We got another one at 3:30. You are German flash. Let's see if I have this typed in. Yep. Flash manufacturer, flash service. So this one happened at 3:30, but this one gapped up 6 pips and it have a just scary volume movement. And overall it moved up 20 pips. So basically it just had a lot of volume. It was moving really quickly. This is just me analyzing what it did last time at 3:30 a.m. when this event happened. So I'm going to take that in consideration and I'm going to think the same way. Okay, this might have a nice gap. It might move 20 pips. It's some scary movement. It's moving up and down real quick, real fast. So I need to make sure that I'm out my trades, or don't get in no trades right before here, or don't take no trades right at this time, thinking that it's volume, but it's really a news event. I'm not going to mistake the spread being widened as volume and price being ready to take off. I'm going to take it as, hey, this is what happened last time. This is a news event. This is what's going on. And this is why it's doing what it's doing right now. So with that being said, you guys can go through the rest of this, save whatever pairs that you are going to be trading, and do the same thing with your stuff. All you really need is the red and the orange folders, and then make sure that everything else is checked, but only pick the pairs that you're trading, just because you shouldn't really care about other pairs and what they're doing if you're not trading them. Although they could affect other pairs, but usually what I like to do is just keep the pairs that I'm trading. All right, so let's go ahead and jump in the computer and look at the charts. All right, ladies and gentlemen, so this is what we are looking at on the charts. Let me go ahead and clean out everything and give you a fresh chart. So this is what I do on Sundays when I am getting started. So first, I go to the monthly, and what I'm doing is I'm actually looking for the last candle. So right now we are currently here. So this was the last monthly candle. This is the high, then this is the low, and then I have a template set up for everything. So monthly high, this is basically the previous low. So I got my monthly, all right? And it broke from the monthly. And now we kind of just keep that in the back of our mind, just in case price gets here and it starts to act funny. We know exactly why, because that was the previous monthly high and the previous monthly low. So from there, we go to the weekly and we do the same exact thing. Grab my lines. This is the previous weekly high, and then this is the previous weekly low. Go ahead and change the template. Week low or week high, and then week low. And we use that for the same purposes, so we can just know where price is and where it's going. What is it breaking? Is it breaking highs? Is it breaking low? All of that. Weekly low. All right, and now we come to the magic, which is your daily. All right, doing the same exact thing. Today is here. The market hasn't opened yet. It's only 4:53 Sunday. So this is where we are currently. Daily high actually is going to be here because a new candle is going to open from here. And then here's the daily low, previous daily low. Now what we're simply looking for, ladies and gentlemen, is a break. We wanted to break one of these to give us basically that indication, the correction, then the continuation. But just for now on Sundays, this is what I'm doing, and I'm going through all the pairs and doing the same exact thing. But I just want to show you on this pair first, just because I don't want the video to be too long. And we might actually even stay on here until the market actually opens up. Obviously, it's not going to open up correctly with the right spreads and all of that kind of stuff because it's going to be 505. But you'll be able to see the next candle form right here, right now, when it opens up. And also what we want to do is we want to take into consideration that this is previous day. So this was the Friday. So what we can internally realize is price never actually came back down here to this level. So I would mark this as another daily, or I would just say point of interest, just because price might pull here and then continue up to match these highs, or it could break lower and then start breaking lows and start to go on a downtrend. But as of right now, this is kind of where we at. So price broke up here, it never returned back. So what we could be expecting is for it to turn back and or start breaking lows and start going on a downtrend, which is kind of what we're looking for, just because it's been going up for a very, very long time. If you look at what it's been doing here, all of these it's just been going straight up. It had this little pullback here, and that's it. But if any of you guys actually use Fibonacci's or anything like that, then you guys know, like, okay, it went from here to here. Usually this is TP1, usually this is TP2, and it got real close to it, didn't quite hit it, so it might push up one more time, hit that, and then drop, or it might just say, hey, let's go ahead and turn around and at least start to downtrend now. Because if we zoom out on a bigger time frame, you'll see that it actually was coming down and then it started to go up. But there is a lot of liquidity down here. You got this spot here, you got this spot here that's never been touched, You have some fair value gaps down here where liquidity needs to be taken out. So it's some spots down here that it needs to definitely trickle down to, but obviously these are super low, which is going to take a while for them to get down here, but we do want to see it get down there. So if you're looking at it from that way, then that's what it got up to. Or if you are position / swing trader or whatnot, and you come in from here down, then you'll see that it came right up there to the 61.8, and now it could be reversing to go down to the TP1 or TP2, TP3, whatever. So it just kind of depends on what it starts showing us. Obviously we can't react or we can't predict what's going to happen. All we can do is really react to what's happening. But point blank period, what we're looking for is, me personally, because I am in sales right now, I'm looking for it to drop. But what we could see potentially is price to come back here and then go back up to match these highs, because it's been an uptrend. You kind of want to just stay with the trend unless it shows you otherwise. So really, that's what we can kind of predict. As you can see, it is starting to reject this area, and if you look left, it already didn't grab these this liquidity right here, and it could be aiming here just to match that high or break that high and then start to drop. Like there's a bunch of different possibilities. All we want to do is kind of just pinpoint where it could go and what it could do, because then we can react to it, right? So at the same time, it could be coming up here to these highs just to tap that and then drop. But we're gonna see what it do. And this is kind of what I do when it comes to Sundays. I'm marking everything up like this to try to see where we at for the week, what we doing for the month, all of that kind of stuff. It is December 14th right now as I am recording this video. And once it starts to hit one of our levels, all we're going to do is drop down to a 5 or 15 minute chart, probably the 15-minute chart if you're using a daily. And we want to see it come down to this area and then start to reverse, to start creating higher highs, because overall it is a uptrend. So
hello, now it's 5 p.m.
All right, we got about 5 more minutes until the market opens, and we'll start to see which way at least my broker starts to open up in 5 minutes. So if you guys are looking for a broker with fast withdrawals, tight spreads, I will link the broker that I trust down in the description below. I have over 200K in this broker right now. I've withdrawn over 200K from this broker. It only took 24 hours to actually receive this money, so I definitely trust it, firsthand experience. It's not based on what other people said or anything like that. I mostly look for brokers that have great conditions, or the best conditions possible when it comes to trading, because I don't have a big influence or anything like that in the trading space. I've been trading for 2.5 years, going on 3 years, and a lot of people don't even know that I trade. So I don't have a course, I don't have a training, I don't have a big audience when it comes to trading. I do have a decent sized audience from back in the day when I used to do network marketing and stuff like that, but not necessarily when it comes to trading. I think I probably have about 3 to 4 people as an affiliate as of right now. So I definitely don't make money off of signing people up to the broker, because I only got like 3 or 4 people, because I don't advertise it as much. But because I'm doing these videos, I might as well give you guys a great broker that I trade with, so you guys can have a nice broker, because I know how important it is to have a good broker with withdrawals and tight spreads and all of that kind of stuff. So that's what it is. But see, we actually opened up on the broker side, but here it hasn't started moving yet. Usually 5:05, that's when you really start to see it moving. But my broker already has some movement going on right now. Oh yeah, I will show y'all PAM account if you guys are interested in that. I will start showing you guys that in the future if that's something that you guys are interested in. And if you don't know what PAM stands for, it could mean a couple of different things or a couple of different variations, but personal asset money management is kind of like the general name of what it is. And basically it's a group fund where you put your money in and you copy someone's trades. It's kind of like if you were in a Telegram group and you were copying my signals, except for AI does all the heavy lifting. So you don't actually have to type in the stop loss, the take profits, and the entry and all of that kind of stuff. It does all of that automatically. And it's kind of what separates the fake traders from the real traders, because you're actually following person's trades. AI. It's not like, oh, you lost the trade because of your broker and the spreads on your broker and all of that kind of stuff, but then they're showing you profits, but you lost. And you're kind of like, hold on, how does that work? Like, how did you win, but I didn't? And then they kind of make up any kind of excuse. And it is what it is. But when you are using AI or a system on the back end to copy my exact trades, when I win, you win. When I set my take profit, your take profit is set. Like, your account is literally mirroring my account. This is kind of, like I said, how you can tell real from the fake, because people that actually trade mind doing this because you're copying their trades. People who don't trade and they just make money from courses and, you know, other affiliate things, they won't do this because they're not actually trading. So what are you going to be copying? Losing trades. You're just going to lose all your money, because then you'll really see that they can't trade, but they would never put themselves in that predicament in the first place. So I've been doing it for the last year and a half, letting people copy my trades and just make money while they're in the process of learning. So I definitely don't want to feed you for a lifetime. I do want to give you the opportunity to make money while you're learning. So it's a lot of people out here that teach Forex. There's a lot of resources out here that will, you know, show you how to trade, or, you know, you can ask around inside the Boss for What group as well, because we have some strategies that you can learn. We just don't sell them or really advertise them unless you're a part of the movement. But other than that, y'all can see the market open, gapped down. So like I said, basically what we're looking for is, I personally am looking for price to just drop and go crazy, because we're in sales right now. But based on a trend right now, it's an uptrend. You might be asking, well, why are you going against the grain, Dre, if it's an uptrend? Well, I trade a little different. I actually grid trade. So what I do is I take positions as it's going in the opposite direction. Then I just reap the benefits when it turns around. And even if it turns around halfway, I'll still make money because of the type of trades that I take. I'm not sure to just, I mean, I do sometimes, but I don't normally traditionally trade, which is, let me, you know, input a trade and then set a stop loss, set a take profit. I'll do a whole bunch of little trades because I really know how to manage my risk. So I'll do really small lot sizes, but I'll stack my orders. So I have sales coming from here all the way up. And then when it starts to come back, I really only have to close out here in order for me to be in profit. But if it continues to drop down to these levels and start breaking lows and, you know, monthly lows, weekly lows and stuff like that, then I'll be in major profit. And then I can just continue to add to those positions too and just swing it, you know, as it comes down, because I don't mind holding trades at all. My longest trade that I've ever held has been 6 months. So that trade, I made $150,000 once I closed that trade. So I don't mind holding trades. I'm very patient, and you know, that's just what it is. But as y'all can see, you know, I kind of use these scales as well to see what we're looking like. And I use something else that you guys might not have known of, or you might, I don't know. Let's see, I use these too. So you got your currency meter to show, you know, obviously these are not going to be accurate right now because it's only 5:07. Like, the market just opened, the spreads are still crazy, all of that kind of stuff. But when the market, you know, goes back to normal at 6:05 or 7 o'clock, you know, when I'm looking at the charts to jump in the trade or whatever, I'm also looking at the strength meter, who has strength, who's weak, all of that kind of stuff. As y'all can see right now, it says US was weak, it says Europe is strong, and then I have this as well. So this is kind of like another indication of who's weak, who's strong percentage wise. And as y'all can see, US is up here, Europe is down here. So, you know, I kind of utilize all of this stuff at the same time as analyzing the charts. And I'm kind of a multi-trader. You know, I'll day trade, I will scalp, I will swing trade, I will position trade. It just depends on the scenario and what direction I'm in. So that's kind of all I wanted to show you guys today. I kind of want to start doing these more and more, just to kind of give you guys a perspective of how I look at the market and how I mark things up. Like, I'm not the greatest trader in the world. I still learn different people's strategies with different pairs. I am a firm believer that different people have different strategies that work with different pairs. You know, some pairs pull back heavy, some pairs a lot. Like, so different people have different strategies for different pairs. So anytime that I come across someone that is a great trader and they trade a specific pair and only a specific pair, then I will, you know, try to learn their concepts for that pair specifically. So if I can put that strategy into action, it will definitely be on that specific pair. I wouldn't use the same strategy that I would use for AUD NZD. I've traded AUD NZD for a very long time, and well, very long time, but consistently 2 years. And you know, I grid trade and hedge trade with AUD NZD, and I can't use that same utilization or that same strategy with other pairs because of the big movements. With NZD, it doesn't move as much as other pairs. The pit movement is just not as big. So just from here, and this is a great pair for beginners that want something that's really slow, really smooth, really steady, but you have to trade it on a higher time frame. So when you're looking at AUD NZD on a lower time frame, it does a lot of wicking, and a lot of people don't like that because it's very wicky. But when you zoom out and you start looking at the hour, 4 hour, daily and stuff like that, it's actually pretty smooth. So I've traded it for a very long time, but like I said, because it moves so slow, I was able to grid trade this and hedge trade this. So I was making money going both ways at all times on buys and sells, because I just did so much analyzing this pair and trading it so much that I've seen how far it can go in one direction before it turns back around. Because it's so wicky and all of that, I know that it will always come back to where it needed to come back to in order for me to close out in profit. And I was doing really, really good with that. So now that I'm on I am learning its ways, and all these other US pairs, I am learning their ways and just adapting a whole nother strategy for these pairs, just so I can kind of diversify, how I make money in the market and what pairs, just in case one pair is not moving like I want it to move, I can trade another pair, but it's a whole different type of strategy or a whole different feel. Not necessarily a strategy per se, but it moves differently, and I'll be able to adjust to that specific pair based on how it moves, because all pairs don't move equally. So with that being said, y'all, I'll catch y'all in the next one. Like I said, I want to start doing these daily, and I really want to show you guys the progress on the PAM account, just so you guys know what we're doing. I don't focus on super big gains. I focus on slow and steady, consistent growth over a long period of time. So I am looking to hit 5 to 10% growth on a monthly basis. And I know that's not what other people are looking to get. You're probably trying to make, 100% in a month, but you can only do that for so long. That's not realistic as far as a consistency standpoint for an extended period of time. You might get lucky and be able to double 1,000 to 2,000 in a couple of days or a month or something like that, and then 5,000 to 10,000. But that's not something that you want to try to do when you get to having $100,000 in the market, $200,000 in the market. You're not trying to double $200,000 in a couple of days or even a month. So that's just what it is. I just try to focus on 5 to 10% a month, and I do that for my people as well while they're learning. So that way you can consistently add to your account and just let it grow 100% hands-free. And if you're one of those type of people that want to learn and trade on your own, you can grab from the profits and trade that yourself. That way you're risking profits and not your main capital that you actually worked for, from your 9 to 5. So if that's an option, or if that's something that you're interested in, click the link below. Join the Telegram. It's absolutely free. You can kind of see the profits that I've been able to do for myself as well as the team, because like I said, all you're doing is copying my trades. You're not taking signals, copying and pasting, take profits, stop losses, entries. Like AI does everything on the back end for you. So it could be 3 a.m, I take a trade, your account will automatically take that trade. When I close the trade, your account will automatically close the trade, and you could have been asleep the whole time. So you got to be on the broker to actually get it. It's not something that you can connect your prop firm account or anything like that to. It has to be, this is a real A-book broker that actually pays out no matter what, because they are a A-book broker, and they are, they have a great fees to keep the money going. So you don't have to worry about not being able to get paid out because they don't have the money, because they will have the money because it's a A-book broker. But stop rambling. I'll talk to y'all later. Appreciate y'all for tuning in. Let's get it. Boss for what? Holla. Check it for AC, and on the shoulder. Black Storm, make a real, don't wanna hear show. So if you with it, AC baby, go and do the most. Bring that over here, go and bend it over. Check it for AC,